Hi and welcome back to Cheeky Crypto. My name's Chris and it's fantastic to have you back with us for another video. And in today's video, we are going to go over at least 9 reasons why I believe that we are not in a bull market. And this is just a bear market rally, and this is exactly what a few months back I said to expect. So we're going to dig into all of this stuff. It's a follow on from the 3 o'clock video. So I guess my request of you as a viewer is to go back, watch the 3 o'clock video that we did earlier today if you missed it, and look at the 2 arguments. That's an argument from somebody else saying that, you know, here's 9 reasons why we're in a bull market. This is my response video to basically this is 9 reasons why I believe we're not in a bull market. But what I want from you is to go look at both of these videos and comment what has the strongest argument. Really interested to get your views and opinions. If you enjoy this sort of content, mash up the like button, subscribe if you haven't subscribed already, tap in that bell, selecting all the notifications so you never miss a video. Jump in the Discord, have some more open conversations with Nick, myself and our team and the wonderful community of over 6,800 people. They're supporting one another, navigate this market impeccably. So let's get down to the desktop. Okay, so we've got this chart here, and I want to start with point number 1, I guess, and that is the fact that unlike the stock market, which has a long track record, in crypto we have had only a few bear and bull markets. So we don't have too much of a track record when it comes to looking at the, I guess, historical data and talking about indicators and stuff like that, because ultimately there isn't enough data. It's a small data set, and I talk about this an awful lot. So reason number 1 that you can't rely on all these past indicators, and we had this back in June. In May, I said that the bottom was going to be in June. June came and it was that bottom that we were talking about. And at that point, I said that I didn't feel that this is a true lower low, and I expect lower lows. Now, when I said that, we got inundated with other influencers saying that we were wrong and, you know, 7 magical indicators. And let us know in the comments below if you can guess which YouTuber that was. But ultimately, I did say that I expected a lot of these to be invalidated. And that is what we saw when we saw the next lower low, which I also predicted. There's a trend going on here, and that is that we're, you know, navigating this market impeccably. Now, I did say to expect bear market rallies, and that is exactly what we've got. We've talked about taking profit, and you know, you definitely want to check out our Patreon. Link is in the description. And you know, we have 2 weekly AMAs where you can ask Nick and myself absolutely anything. So definitely dig into that and see if that is something that resonates with you. But as we can see here from the chart, there isn't an awful lot of data going back to 2014, for example. You know, there's not an awful lot that we can sort of hang our hats on and say, you know, because of X, Y, and Z indicators, you know, we are in a bull market. So that's my first, you know, reason as to why we're not in a bull market right now, and I still think that this is a bear market rally. So that's the first one. The other thing that I would like to highlight as point number 2 is we're still in negative rate territory in the US, Australia, and in Europe as well. Now, for me, it's really important to highlight this because I think that we're pretty premature when it comes to calling for a pivot. Now, there are a lot of people that are talking about, you know, the potential for the Fed to, you know, slow down and that side of things. And I really just do not see that happening. And, you know, the FOMC meeting minutes, you know, align with everything that we've been saying here at Cheeky Crypto. Now, we have been saying that this is not going to be a fast process and that people should still be sort of cautious with the market, and you know, there's profits to be made for sure. So, you know, we're not saying not to make the most of bear market rallies and that sort of stuff, or the market conditions currently, because I think there is money on the table to be made. But what I am saying is just be cautious not to get bought into all of this hype that we're in a bull market. The macroeconomic landscape just doesn't allow for that, in my opinion. But let me know your thoughts and opinions in the comments below. Let's move on to the next point on my list, if I can just find it. And that would be record high credit card debt outpacing savings for nearly 1/3 of the country. And basically, this is just, that is just an example, but record high credit card debt for me, and also that is outpacing savings, is another thing to basically, I say another thing, it's my third reason as to why I believe that, this is not a bull market. And look, I'm going to circle round towards the end of the video to sort of bring all of this together to give my conclusion as to, what I'm trying to articulate here, because I'm probably not the best at articulating what I mean. But, the fact that there's a lot of credit card debt means that, it's an all-time high, I believe, currently, and people are just not going to be able to surface that debt. And basically what that means is that people are going to default, and we're going to see this occur an awful lot. We've seen lots of people losing their jobs at lots of tech firms and now crypto firms, which I did say to expect, and we're seeing more of that with the likes of Polygon and a few others. Immutable was another. So we've got that still on the horizon. Now, that is not necessarily meaning that it's a bad thing for those individual companies, but I think that they're preserving capital, and I think they know what's about to happen, and they're being prepared, and I think that's a real positive thing. So look, credit card debt is going to be compounded with people losing their jobs and companies going bankrupt, and there'll be reasons for that, what we'll come on to in a moment. So that is reason number 3. Reason number 4 is 27% of US consumers pulled money from savings to manage credit card debt. And this is the headline here. And this, again, point 4, so adding to point 3 is the fact that, we've got a new all-time high for credit card debt, but we've also got consumers, having to use their savings to service the credit card debt. And this is something that we need to monitor, and this is why Nick and myself have been sort of articulating that this is a bear market rally, and that this is not going to be something that plays out over a short period of time. So I hope I'm articulating this well. Let me know your thoughts and opinions in the comments below. But that is my point 4, and it needs to be addressed, and it needs to be talked about, really. So let's move on to point number 5. And point number 5 is all about interest rates. And interest rates are set to stay higher for longer when the Fed introduces restrictive monetary policy by increasing rates in 2022. This caused equity markets and cryptocurrencies to appropriately decline in valuation. And it's really important to understand how this works, right? Because the interest rate side of things is negatively impacting the crypto market. And why is that? That's because, it puts a squeeze on the money, the surplus money that people can invest. And, we need to be aware of these things. So look, that is my point number 5. So let's move on to point number 6, and I am rattling through these, so I do appreciate that. There's probably way more that I could talk about, but let's talk about the next element, and that is inflation. Inflation will remain high as far as I'm concerned. Food inflation has reached 14.5%, and that is just crazy high. So not only have you got high interest rates, but you've also got high inflation. This is not a recipe for a bull market, in my opinion. And I think that people need to be looking just outside of the crypto space as well as inside the crypto space in order to get a good sort of rounded view of what to expect in the coming weeks and months. And things are basically going to get tighter. Like, we can look at it how we like to look at it, but ultimately things are getting tighter for households. We've got, Australia's annual inflation eases to 7.4% in January following record run of interest hikes. And I have mentioned that around the world, I think that, there have been some mistakes made, and they will go back to, increasing, the rate hikes and stuff like that. So look, I think this is going to get worse, not better. I just want to be really clear on that. So I want to talk about, I guess, the impacts, and we can see that in the chart here. So this is basically, your inflation. So we've got it here. This is the impact, right? The impact of inflation. So you've got your global M2 here, and then you've got your crypto total market cap year on year, and you see that it pulls back, right? It's following it, and I think we need to raise that. People need to be able to see these charts that perhaps aren't being shared by your crypto influencers and stuff like that. We need to dig deeper and get a better understanding, in my opinion. Moving on, and my next point 7 that I raise as to why we're not in a bull market is this just looks like 2018, and not just 2018, it looks like your typical bear market rally, right? And this is an article from back in January. It says on the daily, one RSI strong uptrend to overbought zone 2. BTC had a significant drop before that. Sudden buyers bought up BTC. Big rally will be following after some consolidation. And this was pretty much bang on, right? And this is why we were calling out for bear market rallies, because we also saw this and highlighted it to our community. So the next thing that I want to raise is the fact that the number of Bitcoin whales dropped to lowest since 2019. So look, this doesn't equate to what we would see normally in a bull run or a start of a bull run. And we've talked about this an awful lot. If we actually get some of the images up, this is basically the wallets with over 10,000 BTC in it. It's not looking healthy. It's up and down. Who knows what's going on there? But what really does open my eyes is the BTC whales over 1,000 BTC. Look at that drop. Same with the sharks over 100 BTC. Look, a decline. And this, raises some concerns for me, right, that need to be raised. If you're just watching crypto influencers, there are many crypto influencers that hold BTC. They will want you to, believe that this is the start of a bull run, right? There's always a winner and there's always a loser. And this is why we say you need to go away and do your own research. They could be, sharks with over 100 BTC for all we know, and they could be selling off whilst you are buying, believing that this is the start of a bull market. That's not how I see it, and I think it's something that needs to be raised and highlighted. So, I thought I would be that guardian angel that does that. Your BTC exchange net change, it's not really changing too much. Look at that. That's more bull market. That's more bear market. So the next point is that there's no real volume backing the actual price and the bull market. I don't think that the volume is there. We see it dropping off here from January to February, and I think we're probably going to see the same as this chart continues. Now, traders also look at liquidity, and liquidity is another concern that I have. I think the liquidity is thinning for both Bitcoin and Ethereum, and this is, in my opinion, one of the main metrics for price. So keep an eye on it, right? If we have a look here, we've got people also sort of aligned to that. Liquidity has the most effect on Bitcoin price in the last year, according to this trader called Brian. So look, I think that there's an awful lot that we need to be mindful of. I think that there's half a dozen reasons why crypto is not in a bull market right now. There's no trend change, which is my 8th point that I would like to make. Ninth point is the fact that there's no real volume back in this long term. Yeah, look, the final point is the whale wallets are dropping, not increasing. They're not buying. So, you know, there's at least 10, possibly 11 points there that I raise for people to come back and let us know in the comments. You know, be constructive in your approach. Let us know. Do you think that, you know, this is all irrelevant, or are you sticking with, you know, your indicators and past historic data that hasn't experienced a recession, a war, a virus, and all of these other aspects that people are just not taking into consideration? Let me know your thoughts and your opinions. What is the stronger argument? Is it stronger argument that we're in a bull market, or a stronger argument that we're in a bear market with a bear market rally? Let me know your thoughts and opinions in the comments below. If you enjoyed today's video, mash up that like button. Subscribe if you haven't subscribed already. Tapping that bell, selecting all the notifications so you never miss a video, and I will catch you in the next one. Take care.